Importance of support and resistance. For X, stock XYZ took a big hit, but expect it to bounce back up once it reaches critical support at $110 per share. Or stock ABC is leading the sector, but let's wait to see if it can get past resistance at $150. Second, if you're holding on to a position or looking to buy or sell, it helps to know where prices might bounce and reverse course. If an asset price breaks through support or resistance, it signals that market momentum may be exceedingly bearish if it breaks below support, or bullish if it rallies above resistance. What creates support and resistance? When demand is greater than supply, prices tend to rise. When supply is greater than demand, prices tend to fall. When there are more buyers than sellers, or when buyers are more aggressive, prices get bid up, as in an auction. Conversely, when there are more sellers than buyers, or when sellers are more aggressive, prices tend to get offered down. But why might certain price levels, like support and resistance levels, attract an overwhelming level of buyers or sellers? The simple answer is that traders and investors expect to see prices bounce at those levels for a variety of reasons. In most cases, these reasons are based on technical conditions and not economic or fundamental factors. Historical support and resistance. Take a look at Figure 1. The lower blue line represents support, while the upper blue lines, solid and dotted, represent resistance. The green arrows point to every instance where price bounced off support, as if from a floor, while the red arrows highlight where price bounced back down, as if hitting a ceiling. Overall, the price action in this chart forms a sideways trading range that finally gains bearish momentum when price falls below the proverbial floor, breaks through support. Floor to ceiling view. Support and resistance points hold in a sideways market until something pushes prices one way or the other. Every price reversal at support tells us that there was more buying than selling, enough to cause prices to rise. Conversely, sellers overwhelmed buyers at the resistance levels, causing prices to fall. Why did this asset bounce at these levels? It's as if the markets have a memory. Collectively, buyers must have thought that the support level made for a strategic entry. If enough buyers bought at that price level last time, then new buyers, or even the same buyers, might purchase the asset, or more of it, at the same level in the expectation that price will reverse and rise. The inverse can be said of sellers and short sellers at resistance levels. These are all technical entry-exit points. 2. Trend lines as support and resistance asset prices don't move in a straight line. When prices are trending up or down, they often have to take a bit of a breather, which is known in financial terms as a pullback. These pullbacks provide traders and investors an opportunity to jump into the market or add to their existing positions. The trend is your friend till it ends. But no trend lasts forever, and eventually something will cause the market to break through support. Notice the main trend line in solid blue and the smaller trend line in dotted blue. Importantly, notice how price tests the trend line without breaking through it. How? Bulls supported the price by entering the market in droves with buy orders. The same reasoning applies to a downtrend. Selling pressure overwhelms buying pressure when price takes an upside breather. Figure 3. Resistance is eventually futile. Just as support points can break at the end of an uptrend, resistance will eventually fail at the end of a downtrend. 3. The 50-day moving average as support and resistance. A third popular form of support and resistance is the 50-day moving average, MA. If you watch financial media, it's common to see technical analysts pointing out potential support at the 50-day MA when describing an asset that's pulling back from a rally. Likewise, a downtrending asset may be considered reversing to the upside if it begins trading above the 50-day MA. Open full-sized image. Figure 4. Support and resistance aren't always straight lines. So, what is a moving average, MA? It's simply an average of closing prices over a period of days. In Figure 4, the MA, black line, is tracking the average closing prices over the previous 50 days. On the left side of the chart, the 50-day MA seems to act as a resistance point. When the stock did break through to the upside, it indicated the trend had changed. At that point, the 50-day MA began to act as support. The green arrows show where the stock price bounced off the 50-day MA and continued to trend higher. The bottom line support and resistance can be helpful for planning trade entry and exit. They can help you anticipate pullbacks or reversals in price. If you're holding on to a position for the long term, understanding support and resistance can help you avoid surprises. But remember, support and resistance mark conditional levels. They may not always work out. So if you're going to use them to aid you in your trades, always have a backup plan in case the market doesn't move in your favor.